Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with just Dennis Dick. Joel is God knows where in San Antonio, probably still partying from Saturday's Michigan win. He'll be at the game tonight. So just Dennis and I with you today and tomorrow. On today's show, we are going to discuss the gaps that we saw on Thursday's close. You had to be out there to get a piece of the action. We saw some gapping action in UNH, in Intel, a few other stocks, McDonald's as well. So we'll talk about that. We'll talk about the news and subsequent volatility in Tesla and Under Armour. We had a couple merger reports over the weekend. Walmart sniffed around in Humana, Viacom, and CBS as well. We'll take your questions in our chat. As always, premarket.benzinga.com and youtube.com/benzingatv. Our guest today is at 8:35, Angie Setzer. She is the vice president of the Grain for Citizens Elevator. She is one of our favorite commodities guests. So any commodity under the sun, she will be able to discuss. Looking at the markets this morning, S&P futures. I haven't been following this super closely the morning, but we are trading. We are trading up. Haven't looked at gold yet. So let's pull up the chart of gold futures and see where we are. Hey, look at that. Trading up in gold and oil is oil approaching $60 a barrel, or $70 a barrel, excuse me, right at 65.22 this morning. Dennis, how was your nice long weekend?
Well, the weekend was great right until Sunday night. We went to my parents for Easter Sunday, and they've got a warehouse there. We're all having, supper in the warehouse, and just kind of a little freak accident. But my boy crawled up on a marble, like a little table, a small little table. It was just an end table. And he was just trying to get over actually to where the desserts were. Funny how 3-year-olds are. And the marble table flipped over and just clipped his toe. And you know what? If it hit his whole foot, it was so small, I don't even think anything would have happened because it just clipped the toe. It ended up, cracking the toenail. Doing a pretty good number on his big right toe. So we ended up taking them to emerge because it was bleeding pretty good. They x-rayed, no breaks, which is good news, obviously no breaks. And they said, he'll make a full recovery from it, but they did have to take the toenail off. And the end of his toe is kind of a little bit, mangled from where it got hit. So, you talk about that, like just the tip of the toe. So he's on some Advil and that's all they can really do. So he's not in the best of moods. Obviously hurt a lot last night, but so that was a little bit of a disappointment, obviously, on the end of the weekend. But, good news is nothing was broken. He's expected to make a full recovery. It was a scary incident at the time, though.
Yeah, it makes you wonder, how did I ever survive childhood? How did I make it out alive? I don't even know.
I know. Stuff's going to happen. It's the first real accident that, like an injury, like a serious injury that he's had. So, I guess this is how it goes through childhood. But, it just clipped the end of the toe and it's kind of a freak thing. Like I said, if it hit the whole foot, I think it probably maybe, might not even done any damage because it really was small. It didn't fall that far. But just because where it clipped, it just kind of clipped the end of the toe a little bit just to, where you're just kind of soft. So, obviously cracked the toenail, and that was the big deal. Right. So, all right. Anyway, so that was a little bit of downer.
Well, yeah, that's not.
But he was doing okay last night with it, and he's on Advil now. So hopefully, the pain they said 2 to 3 weeks, he should be feeling a lot better.
All right. So, well, let's get to the markets, and we'll
get to the better stuff. Here. Obviously, that was a little bit disappointing. So. Let's talk. We're going to eventually get to the Humana Walmart story, which is a big story from Thursday night. The rumors breaking there that Humana might get acquired by Walmart, and Humana is trading up 15 points here this morning. But I just want to talk about, the Thursday close, because a lot of times you see these end of the quarter closes. Sometimes it can be pretty exciting. Sometimes it can be really crickets. This one was an exciting one. There was a ton of action on the close. And if you actually go and look at these charts, some incredible individual stock action as well. Just huge imbalances, closing imbalances, pushing stocks around. So if you want to look at Apple, for instance, it ran down in the last 10 minutes, not even last 5 minutes, ran from about 171 straight down to 167.78. Just big sell imbalance. The opposite way, Intel ran straight up $1 in the last like 3-4 minutes. You can see it right in the trade. Ran up in the close because there's a huge buy imbalance pushing it up there at the close. So you can see it went from 51 to 52.08. So big sell off in Apple at the end, big buy imbalance, and Intel pushing those prices away. Now, where the real fireworks and where I did well was this was actually my best close that I've had in over 5 years. So it was a really good close. And I'll tell you, how you participate in this type of stuff is using the limit on close orders. So basically, what a limit on close order does is you mark your order LOC, which is limit on close, and that says fill me at the close, or if it can't be filled at the close, cancel the order. So let's jump to a stock like UNH, which was one of my biggest winners there from Thursday. UNH was trading around 222, huge sell imbalance. And, I saw these, because I'm subscribing to the proprietary feed. Huge sell imbalance coming down, 222, 221. People are selling it ahead of the imbalance in the last few minutes because they can see that this looks like it's going to close really weak. At 219 at 4 o'clock is at 219.82. It's a huge sell imbalance still on the board. Stock gaps all the way down to $214 close. So gaps down $5.82 on the closing print, all the way down. So I have orders out there because I saw, and I marked them limit on close. And, if you're, for example, I can't remember the price I put on it, but let's say I put a 219 buy on UNH, limit on close. That means if UNH closes below 219, I'm going to get filled on the close. If it closes at 219, I might get closed on the fill on the close. If it closes at 219.50 or 219.20, I'm not going to get closed because my limit order wouldn't, obviously execute if it's a 219 price. So I get filled, boom, 214. I'm filled on my UNH. Immediately, the stock is bid up at 218 because after hours, everybody is still sitting out there. And, it's kind of just the only people who were getting the 214 were the people who were on the New York closing, print with, limit orders or limit on close orders. So there's very few people that participated in that. So stock was immediately back up. And then later on, you had the news with Humana and obviously Walmart that pushed UNH back up in the 220s. So I fully expect UNH to open back up at 218, 219 area here today, even with the S&P weakness. But, the only way you were going to get those is if you had the orders on the book. Another one, Citigroup. I got filled on this as well. It was at 69.05, about right at the close at 4 o'clock. Gaps down to 67.50 on the closing print. So gaps down $1.50 on the closing print. That's an enormous for Citigroup. That's unbelievable to gap down $1.50 on the closing print. I get filled on it immediately. It was back up at 68.50, 68.60. So I can immediately sell for over $1, which I did. McDonald's, same story. MCD, I was trading around 159.5, runs down to the close because people anticipate it's going to close weak. 158.49, gaps down all the way down to 156.38, gaps down $2 more on the closing print. I get filled 2 points down and immediately sell it up in the 158 handle because there's stuff there after hours. People are just, there's obviously orders are sitting out there just from, where it looked like it was going to close, and it closed way below there. So I was able to almost immediately sell all of those for some serious, like 2 points I got at McDonald's. I got over 4 points or 5 points, I think, in UNH. Citigroup, I got almost the whole $1.50. So those were the three big ones. I am still short, so I shorted Intel. I'm still shorted. I stayed shorted because I was looking at that run up $1, and I feel like that's just fluff from the close, and I feel like it should give that back. It is already giving back 50 cents of it, but I feel like there might be more on the table, so I'm still, full disclosure, still short Intel and still long Apple because I bought Apple, and Apple ran down $2. So I kind of got the Apple Intel spread going right now. Apple is down just slightly here in the pre-market, probably because the overall market is down, but I just looking at that, it ran down $2. I feel like there's, if you're just looking at those imbalances and thinking that those moves often do come back, I've got the Intel Apple pair going.
What gave it away? Why were you out there in the first place?
Well, there was just huge imbalances across the board. And actually, some of our other, we're at Bright Trading there, and
right.
A couple other messaged me too, say, Taylor, just look at these imbalances are huge. But I had already seen it. You can see that the huge imbalancers were subscribing to the feed, and they give you projected closes. Like I'm using, our software there through Bright Trading, and it's projecting out the close. And often you see this happen, but I throw them out there just in case. Like usually what happens is you'll see something projected to close really weak, and what ends up happening is it just offsets, and it doesn't go anywhere. And there was a lot of stocks. It wasn't just these 3 or 4 stocks. At about 359, it looked like there was going to be a ton of gaps. most of them paired off. Most of them, I mean, what I mean is most of them had offsetting liquidity that came in that caused those stocks not to gap down or gap up. But these stocks didn't. So it wasn't just, I just didn't have these 3-4 stocks. I probably had, 50 or 70 stocks out there. Yeah, I used to run this automated. You can totally run this automated, but it hasn't really done much in the last few years. So I really haven't been running the automation on it lately. Full automation, though, if you were running this full automation on this, close, it would have been, a jackpot for anybody who was providing liquidity into those close. Because all I got filled on was those 4 stocks, and I was able to, make a serious amount of money, really, when you're making 4 points on UNH. So anybody who's running full automation and, had some size on those stocks made some serious money. Like, you're talking about millions of dollars being probably lost and, obviously made by somebody else. When you see UNH falling 5 points in the closing print or Citigroup falling $1.50, that's serious money moving around.
At what? So you're making these LOC orders, but at what price you're getting filled at? Just your price? Your price?
Yeah, well, no, you're not, because so if you're getting, so just to re-explain it here, well, let's use UNH as the example again, because I had the biggest gapping down $5 on the closing print. So stock is trading around 219.82. If I put let's say the stock is at 222. If I put a 221 limit on close to buy, the stock can trade through my price during the day because that order is marked for the close and the close only. It will not execute during the trading session.
Right.
It will only execute at the close. So you could put a 221 buy. The stock's trading 220.5 at like 359.59. You're not going to get filled until that closing print happens. When that closing print happens, you get filled because that's how it's marked. That's why I've marked them limit on close and not just limit orders. Because if you're just using a regular limit, you would have been filled. If you had like a 220 buy, you would have been filled before the close. And now it's gapping down 6 points in your face.
Right.
So there's risk. So, ask your broker. Most of your brokers support these types of orders. There's a lot of retail platforms do it as well. It's called the limit on close order. It's opposite really to the OPG order. OPG order is used at the open, where you get filled on the opening print you're trying to get. So fill me on the open or cancel the order. That's what the order does. Limit on close is fill me on the close or cancel the order. So even though I've marked my order, say 219 on UNH, I'm getting filled on the closing print. So you get the price improvement because they fill the entire block at where they can, put it across.
Sure.
So if 219 buy, stock is, sitting there, you're not going to get 219. It's not going to fill out all the limit orders. Everybody who's on the book is going to get where that closing price is. Closing price was 214. If you had a buy order out there, you're getting long. If you had a sell order out there, you're getting short, or you're getting sold. And obviously, if you're selling that close, you're doing it wrong because you got hurt pretty bad.
How do you go about
the people who were selling that close on UNH got hurt. The people who were buying that close made the money.
How do you go about incorporating auto trading capabilities for the average trader, Rob Hood?
Oh man, it depends on your software. There's actually a lot of your retail platforms do have, different, teams now that will help you, put different stuff out. But all you really need, is like a spreadsheet or something to be able to send a mass amount of orders. That's the biggest issue is, and this is why these aren't retail strategies, because you get margined out in a hurry. For instance, for example, I do have, an interactive brokers account, and I actually was using a little bit of that as well, but you get margined out really fast. Because if you throw, and if it's 4-1 or 2-1, 4-1 intraday, if you got $50,000 in your account, you can throw 200,000 worth of orders and you're done. So it's not about 200,000 positions. You only throw that many orders out there. So it's capital intensive strategies. And that's the good thing about proprietary traders is they have more capital, like their exposure, because they're using company money. So that's the difficult thing. You could cherry pick some of them, obviously, as retail traders, but you kind of need to be well capitalized to be able to send a large amount of orders. So that's the advantage that we have as prop traders.
All right, let's move on.
That's a lot of talk on a lot of options type. I just want to tell you there is some fireworks. This isn't like every close though. This was the first time I've seen something like this in a few years. So where you've seen major gap downs on stock. So don't think it's going to happen tonight. I'm going to make some money. This is probably not going to happen for a long time now, because a lot of people, a lot of high frequency traders probably taking note of that too. That obviously didn't participate either enough, or the stocks wouldn't have went down as much as they did. Right. So I think because the close have been so quiet for a while, people haven't been focused on them as much. And there was some fireworks there on this close.
All right, let's move on to some of the news we've had from Thursday, Friday, over the weekend to this morning. Let's start, I guess, with the Walmart Humana news that Walmart is sniffing around in Humana. They're in early stage talks, according to the Wall Street Journal. Don't know how they'll possibly be able to afford an acquisition. It could be an acquisition of a merger of some kind. We don't really know what it could be, but that's the report out there that Walmart and Humana are in early stage talks.
Yeah, and obviously this really moved the stock Thursday night. Humana trading all the way up, I believe, into the 300s. I don't know if you have the high. I didn't write it down, but
305.
I think it was high. Do you have it?
305.
305 it went all the way up to. Now, obviously, isn't as high now because nothing has materialized here over the weekend. Many people were expecting a deal to get announced, did not get announced. So still trading up. Now, this is interesting. I mean, I don't know about if I'm a Walmart shareholder here, and I'm short Walmart on this, full disclosure, simply because it's a lot to chew on. I mean, you're going to pay a huge premium for Humana. Maybe it makes sense. I understand that they got a pharmaceutical business. There's, CVS made a big, purchase a while ago, but I don't know if I'm Walmart. I'm not really liking this as a shareholder, and that's why, I did short Walmart on this news just because I feel like this is just a rumor here too. And I mean, obviously, if the rumor gets shot down, the Walmart price will bounce right back, and it's not down very much, but the Humana price would fall off too. I mean, we've had, multiple rumors in these stocks for a long time. Right. I just feel like I don't totally get it. So anyways, there's multiple commentaries. There's Piper's commentary, a lot of analysts commenting on this morning. It was moving the other stocks as well. So if you want to talk sympathy moves in the sector, I mean, UNH is one of the big ones. UNH is going to be wild because it had the closing gap down too, though. So it's going to be up no matter what because the gap down 5 points. Closing right. Brent wants to get some of that back. But CI is another one. Anthem, ANTM was trading up Thursday night on this news, trading up a little bit here in the pre-market just on odd lot. You got WellCare Health Plans, WCG, CNC, Centene is another one I think about. But, this is still just a rumor here. So it's not like you have an official deal announced where all these things are going to get driven. It's still just rumors. And Humana is not up nearly as much as it was Thursday night. It's now only up 6.8%. So really, when you think about the leader being up 6%, what a sympathy play maybe be up 1%. So some of these might be up. But there's lots of sympathy plays to play with it here. I'm just looking on the deal itself, though. I don't know if I totally get it. If I'm Walmart.
Right. Remember that the Aetna Humana acquisition that was not to be that was back in 2015. That valued Humana at $54 billion. They had a $37 billion market cap as of Thursday's close. I think Walmart has like $7 billion in cash, so I'm not sure how that would work. But yeah.
Either way, so I don't know if they even have enough cash for this. So no. It's a big thing. I mean, can Walmart do it? Sure, they can. It's Walmart. They can do it. I just don't know if it makes sense. Anyways, it is what it is. I mean, it's trading up. It's a rumor. It's a substantial rumor. Who broke it? Reuters?
I think the Journal or Dow Jones had it.
Oh, it's okay. So this is serious. When you're getting them breaking from Dow Jones or, obviously Wall Street Journal. Sure. I mean, this is serious rumors here. There's something to this. So we'll see. We'll see what materializes. There's a deal to be had here. But the initial thoughts on this is I don't totally get it. My own opinion.
All right. Let's go back to Tesla.
There's other rumored deal news, just if you want to talk about too. Viacom. So this has been rumored forever. Thursday night again, same thing. It was I don't know who broke this one. I think it was Reuters or Bloomberg, just saying that CBS might announce some type of proposal for Viacom in the next few days. So Viacom was trading up a little bit on it Thursday night. Viacom is a bit up. Full disclosure, I do own Viacom just as a overnight trade here on the news. Stock is just only trade 100 shares though, so it's not getting much of a lift on this. I mean, this isn't out of the blue. We know CBS has been meeting and talking about it, so they're just kind of giving you a timeline that something could be coming in the next couple of days. So that could be market moving.
Let's go to Tesla. We had some news on Tesla over the weekend. Some recalls. Every Model S car built prior to April of 2016, and they're recalling those models to retrofit a power steering component. The issue has not led to any accidents or injuries. It's funny because you don't usually see recalls move car stocks, but Tesla is obviously its own beast. And on the heels of last week's car accident that the NTSB is investigating, just another headline risk.
Well, and what was driving it down on Thursday or Wednesday night and Thursday was the Moody's report, saying that they might have to do another capital raise. So now you got a recall coming at you. You're going to need capital for that too.
Yep.
So everything's pointing to them going to be needing more money very soon. That's telling me that there might be another equity raise. There could be a secondary here, and that obviously is going to be at a discounted price. So I think that's why the market's got it down $10 here this morning. That being said, there is a setup here, and if the 248.21 low from Thursday can hold. So that is the low that I'm looking at. We're 7 points above that. We could test that. I mean, you got a weak market. We could test that. If it holds and makes a double bottom or something, for a 2-day bottom, sometimes those patterns can reverse. So that's the bogey I'm looking at. Anywhere around 250, there's actually a trade to try it. If you wanted to try 248, 249, 250, give yourself a 3 or 4 point stop. Give yourself some room because you don't want to go 248 on the kisser and you get stopped out for 20 cents. You got to give yourself some room. It's a $250 stock and it's wild. But there's a setup there. I think there could be some buy the dippers looking at this as an opportunity here because we did bounce back on Thursday. Now we get the dip on, the recall notice, which, like you said, for another company wouldn't be a big deal. It's a little bit of a bigger deal because they need capital. But, we know they're probably going to need capital. We already knew that. They might just need it sooner than later. So I don't mind if you're trying at a 250, but absolutely if it starts making new lows in the move, starts going to 245. I don't want any part of it. But that being said, too, there is that next support level, too. So there's all kinds of stuff. We talked about this triple area, the 243 area, which is huge as well. I believe it's John Dodson in our chat talking about that, too, 242 to 243. So you do have some nice support forming down in the 243 to 250 area. So you could take a shot. I mean, there's the opportunity there. Just make sure you're taking shots on stuff like this. I always like to have a stop out.
Remember that this week, I don't know when this week, but sometime this week is when they're releasing their Q1 deliveries, right? And they were targeting 2,000 sedans a week by the end of March. And this week is when they come out. I wish I had in front of me what day that's coming out, but that'll obviously be a major catalyst for Tesla. It's the only catalyst, or I guess prior to last week's news, but that's the main story is the Q1 deliveries, which they're gonna expect it to release this week, and I guess we'll see what happens. But wasn't Raz saying on Thursday he'd be buying at 240? So
he likes it.
Yep.
Yeah, he was saying maybe a little bit further down from here, but yeah, I think Raz was using that same number area, and he's looking to add his position too. He was talking me into it a little bit too, but I trade anything, and I've owned Tesla as swing trades before. I've never put in my long-term investment portfolio because it doesn't fit my valuation criterion. But it's interesting here. I mean, I'm interested in here as a trade, and that's the way I look at it as a trader. You got to wear two hats. I wear my investing hat. I'm not that interested as an investment because it just doesn't fit my style of investing. But I'm definitely interested as a trade. And interested in that 250, down to 243 area, just saying that we could bounce. And, it's a little bit oversold here in the short term. I think you're due for a bounce. I think it's a possibility.
All right, let's move on to another stock in the news getting hit this morning. Under Armour had a data breach. This came out, I believe, Thursday. I want to say it was after the bell. Maybe it was like 4:30. Yeah. So users of MyFitnessPal, which is an app that I use, which is an app that Under Armour bought, I want to say a year or two ago. They had a data breach on that app. I don't really, as a user, I don't care as long as the hackers don't know my true weight. I'm happy. But that would be bad if they knew that. But no. So data breach. What else is new? This seems like every week.
It seems like not that big of an issue to me here either. I do see UA trading down in the pre-market here. UA has had struggles. UA just got stuck in the hard pace place, and I've talked about this before. Growth started to slow there, and the growth investors laid off, and that's when you had the run from the fall from 40 down to like $15. And the value investors like me were looking at it and saying, okay, what's coming in? What's that valuation look like? And they were just trading with such a high multiple, it never got really into where the value investors were going to come in. And I've talked about this stuff on the show there before too. It's my own analysis and my own thought process, and why growth stocks fall so quickly when they start to fall. And the biggest thing I say is when the growth investors are out and it's too expensive for the value investors, there's just no investors in there to hold it up. And that's when you've seen the fall really for the full year there as it came down to get and then it gets down to $10-11. It starts to get interesting from the value investors' perspective, and those guys start to come out. Starts to go up again. The growth investors hop back in. So UA, has looked a little bit better here, obviously in the last 6 months, but it's been an ugly couple of years here for United or for Under Armour. I will say you got some support down here if it really gets ugly here, and I don't think it's gonna. 1360, 1370, those were a couple bottoms there we had near the end of March or just a week ago there. That's the levels I would be looking for if I was playing this from the long side. If I think that there's the potential that this could be a pullback I want to buy, those are the levels I'm probably leaning on.
Speaking of growth stocks coming down, I don't know if you caught the cover of Barron's on Sunday.
What's on the cover?
marijuana stocks could be a buzzkill. Specifically, Canadian marijuana stocks could be a buzzkill, and this is all valuation. But it's in the same theme as what you were just discussing. Is these stocks, and you said it on the pre-market show. They have a couple plants in the greenhouse, and they're worth $1 billion. So, but Barron's is not too keen on valuations in a bunch of these, mainly the big four, big five Canadian marijuana stocks.
I mean, we're going to have Alan Brockstein on, I believe, on the 20th, which for 420.
Yeah.
So we're going to have Alan on, and Alan knows this sector so much better than me. Obviously, follow Alan Brockstein on Twitter. Nobody knows the pot stocks better than Alan. The one reason I don't invest in these, and I'm close to Afria, and I believe Afria is mentioned in Barron's article as well. Close to that because it came from the town that I was born on. There was, a couple guys down there that bought some greenhouses, got the plow plants going, and it's built this business up significantly there. You're talking about a business that is now worth $2.4 billion as a market cap. But then I look at it and I say, well, there's greenhouses with pot plants. And yes, they have a good business. But is it worth $2.4 billion? I don't know. It got up to $23, $24. It was worth $5 billion. That's when it got crazy. Now it's starting to get a little more interesting. They have a business. They actually make money. And there's not a lot of these power companies that make money. So at a certain point, it does become interesting. And Afria has APH, if you're following it along in Canada, or APHQF, if you're following in the US. But evaluation is scary. And I don't own these. And everybody in Leamington always asks me about them. And I don't own them for the simple reason that they don't fit my description of value stocks. And like I said, I'm never going to get these huge movers. As a value investor, you're never going to get these huge movers, where you're making 200%, 300%, 400% in a year. But I've always just been, as an investor, I've been more of the, I grind it out, kind of like the Warren Buffett approach. And if I can make 6, 7, 8, 10% regular annual return a year and have a lower beta doing it, I feel like I'm doing better than the market. And that's why stocks like this, I do have speculative stocks. I do put them in every once in a while. I know some people probably call me out in the chat because I do talk about it every once in a while. And you got to have, you can have 5% of your portfolio and a little bit more spec stuff. So maybe it has some stuff like this. But as my core holdings, I don't have this kind of stuff because I'm scared to death of the valuation.
All right.
Good company, scared of the valuation.
High flyer of the morning is Medicinova, ticker MNOV. They announced last night they are terminating a study early based on significant positive results from the interim analysis. This is a phase 2 trial. MNOV is our ticker.
So I know nothing about this company. This is actually, I think, one of the first times I've actually been bringing it up. And I trade a lot of stocks, so I have not been following the story whatsoever. I just tell you, we can give you a technical on anything always. I don't know what it do. I'm just curious what it's done after hours. Do you have the after hours range? Does this thing really?
Let me see. Yeah, after hours, it looks like it hit a high 1694.
Got crazy. It's already coming in. So it's always good. Like you can come in and say, wow, great day for it, 27%. When I was up at 16, it's like, is it really a great day for it? It's already given back half the gains. Different story. It's already given back half the gains. And it's not trading above the highs that it made there just a few days ago, back at 1370. I mean, that 1370 holds and can't get up through there, then you start thinking this is a nice opportunity to maybe get back some of the losses that you had from Thursday when this thing gapped down. I don't know why it gapped down. I'm not following the story, but it's a weird chart. When you gap down and gap back up, everybody who bought the thing obviously is saying, thank the stars here that it's come back. And I think they probably looked at lighten up. So it's not good news that this thing's not trading above those highs. And I think, I'd be more prone to sell in the upper 13s as opposed to buy it.
All right, and then a question from our chat on another biotech this morning. ALKS, Alkermes, was halted earlier. I think it resumed. Yes, it did resume at 7:30. They got a refusal. Where's the news? A refusal to file letter from the FDA. This is after the CEO had previously assured investors that the drug for this drug in question would be approved. Not going to get approved, at least right now. ALKS getting the beats.
Down 11 points here in the pre-market, 20%. It's not a pretty day for ALKS. Already traded 297,000 shares, so it's serious volume here too. You got to go out to the weeklies to find anything here. You can find some support here. I do see in October we got the low there, 46.20, 46.42. That's my bogey here. It's trading right there right now. Through that, you got to go back to the October 2016 lows of 41.93. So, Joel and I always have had this, level, simple analysis of it. Our technicals are very simple. We already played it that way. And I've continued to play it that way, for my trading career, as I've always kind of incorporated those different numbers, probably from Joel, because he taught me that way back when we started trading. And when I started with Bray trading in 1999, Joel was very big on levels. And, the stuff does work. And, we've proven it on the show here multiple times is, you just look at old lows and old highs, and those seem to sometimes come in and hold. So this is the same story here again. That's what we're looking for in the technicals. So I go to the most recent low. I look at that one. I say, if that doesn't hold, then I go back to the October 16 lows of 41.93, 42.26. I mean, these things are wild. When the thing's down $11, you can easily lose another $4. Sometimes, it can hold there and bounce. But a lot of times, when there's bad news out there, sometimes these things continue to leak. So I've, just learned myself the hard way. It seems like when you're buying, drug stocks, and this, what was the news on this one, by the way, Spencer?
A refusal to file letter from the FDA.
Okay. Anyways, in any regard here, it seems like, sometimes these stocks, when they have bad news, can continue to leak. And this one, I don't know if I'm coming here and buying it this morning. I don't let the dust settle a little bit and see, if it can put in a bottom or something, as opposed to just trying to pick the bottom or call the bottom.
831, Dennis, we have opening imbalances.
Well, let's go take a look and see what we have going on. Obviously, we're going to see some buy imbalances in those stocks I talked about gapping down. Citigroup's small buy imbalance is not even that big. Actually, there's not hardly any imbalances at all. I guess those Disney market makers are slow to post, or they're just there's just not a lot of institutions putting their orders out there early today. Alibaba small sell imbalance, 22,000 shares. GE, 87,000 to buy. GE is interesting. I mean, it's been a little bit of a wild child the last few days.
Buffett, maybe.
It sold off and it got a little lift, and then it kind of had an inside day. I mean, we know why it was going up. It was rumors of Warren Buffett. I don't think we've ever had any confirm on any of those rumors, though.
No, we did not.
Yeah, so we don't know if that's true, or if there's a big investor. But if obviously it comes out that Warren Buffett is in, the thing will pop 7, 8, 10% in a hurry. Mm-hmm. Now, we don't know those. There's still just rumors there. So we're waiting to, either get an interview from Buffett. If he declines, I think the thing falls. So there's like this wild card on GE right now. Is Warren in or is Warren out? We don't know. We'll obviously know within 45 days, because if he bought, he'd have to file. But, usually, CNBC is pretty good. Sometimes they get an interview with them, or somebody get an interview with them. And, sometimes they'll say, oh, no, that's not why we're not in. Or, yeah, we were buying something.
But he hasn't said anything so far.
He hasn't said anything yet. So it's interesting. Maybe he's still buying, or maybe he's not. But it's interesting that he hasn't said anything yet. Because he hasn't said anything, I wonder, well, Warren's somewhat tight-lipped, though, too. So he's not one that's just spilling it to everybody out there. So he likes Becky Quick, when she was on, always interviewing him. He'd often, give her, something that he recently bought and it would move. But watch any Warren Buffett interviews right now, because G is a wild card there. We don't know if Warren's in or not.
All right, 8:33. We have a minute or so until we're going to break for our guest. Anything quick you want to hit on before we do that?
Just quickly here, jump over to the stock I had on my list here. Just a couple upgrades. Tesla is getting an upgrade here this morning. I can't read. It's funny. I write it down. I can't
Jeffries.
Read
Jeffries upgrading.
I got like a J.
It's okay.
There's something that resembles an R in there.
Yeah, Jeffries.
My handwriting's brutal. And it's just a hold.
Yep.
Now, maybe normal, if there was no other news, you'd see Tesla trading higher. So if you're asking yourself, why is Tesla trading up on an upgrade? The simple reason is that they got that recall out there, and that's overpowering it. Mm-hmm. You also had Discovery catching an upgrade at Wells Fargo here this morning. Full disclosure, small, long position in Discovery. And then there was quite a few other ones too. Just can you run them down really quick the next minute, Spencer?
Baker Hughes.
I took my list down.
Okay, Baker Hughes catching an upgrade from Bank of America to buy. JB Hunt at Deutsche Bank. Deutsche Bank upgraded JB Hunt, Werner Enterprises, and Union Pacific, all from hold to buy. You mentioned Wells Fargo upgrading Discovery to outperform. RBC upgrading Paychex, ADP, and Darden Restaurants. Upgrading, let me see, Paychex was to sector perform, ADP and Darden to outperform. Keefe upgrading Allstate to market perform. You mentioned Jeffries upgrading Tesla. We had Goldman Sachs upgrading NTRS, Northern Trust, to buy. And those are the main upgrades as far as I saw. As far as downgrades go, Fitbit catching a downgrade this morning from Morgan Stanley to underweight. And what else did I see? I saw Barclays downgrading XL Group to equal weight, and that is pretty much the only ones of note that I saw. Did you see anything else?
No, that's pretty much what I have here too. So that's a good rundown there, Spencer. So let's go grab our first.
Yep, Angie Setzer, Vice President of the Citizens Grains for Citizens Elevator, and we'll be right back with all the commodities you'd ever want to know about in a moment. Welcome back, everyone, to PreMarket Prep. Spencer Israel, Dennis Dick, and we are on now with Angie Setzer. She is the Vice President of the Grain for Citizens Elevator. Angie, it's been a long time, too long since we had you on. How's it going?
Oh, fantastic. Yeah, I'm just loving this beautiful January weather we have going on.
I just was at my parents in New Jersey over the weekend. They're getting snow this morning. I was happy to get the hell out of there and to Detroit, where it's downright balmy, at least balmier than it is over there. Yeah. So how is the weather been? We've had, seems like a weirder winter. How's the weather been impacting markets that you've been keeping an eye on?
For the most part, it hasn't been. I mean, okay. all winter long for us, we've just been focusing mainly on South American production weather because of the corn and soybean production that takes place down there between about November and March. So I'm trying to transition my focus from, Argentina, dry conditions, the drought that's impacted soybeans and stuff like that down that way, back to North American weather. And so last week we finally got the updated planting intentions report from the USDA. So kind of like the opening day in baseball, you get planting intentions and you realize that spring's around the corner. But right now, we are starting to focus on the fact that it is pretty cold. Frost is pretty deep up north, most specifically because the USDA put out a pretty large increase in spring wheat planted acres up that way, taken away from soybeans and corn acreage to the north here. And they're supposed to get started here about another 2, 3, 4 weeks, getting that wheat planted. And at this point, unless we see a pretty miraculous shift in weather patterns, that's going to be a challenge. So yeah, we haven't really been paying too much attention to North American weather here the last 4, 5, 6 months, but now is the time to start shifting that focus. And we're looking at it cold, wet, snowy, and not a whole lot of fun.
What else did that report tell you aside from the wheat, or was that in the report, or was that just aside?
Yeah.
Okay.
Yep. The USDA puts out the planting intentions report the last trading day of March every year, and it gives us insight into all of the acreage they anticipate to be planted. So what they expect to see from an overall standpoint. And the one thing that we saw that a lot of folks have taken away from it is that the soybean planted acreage came in lower than anticipated. Corn acres came in a touch lower, or a little bit lower than anticipated. The biggest surprise, I guess you could say, if you can call it a surprise, is the reduction in the overall acreage pie. So we saw about a 1.5 million reduction in total planted acreage, which surprised some folks. Simply because we've been anticipating this for a while, urban sprawl and things of that nature, but we hadn't really seen it. In fact, the USDA had increased acreage here or there a couple different times. And so to see that cut made this year was a bit surprising and really kind of prompted a significant market rally into the close of business there for the month of March. And so farmers are happy about that part, but we're waiting to see what really happens. And as I said, Mother Nature is the final determining factor when it comes down to all that good stuff.
So what's been going on down in South America that you mentioned that you've been keeping an eye on? We haven't.
Yeah, well, Argentina has struggled with a pretty significant drought down that way. Some of the driest conditions they've experienced during their growing season in several decades. And so that really cut into their outlook when it comes to soybean and corn production. Fun fact, you can share at parties later, Argentina is the third largest corn exporter in the world and the largest provider of soybean oil and soybean meal into the global market. So it is important to watch, especially when you look at their soybean crop being cut. There's talk right now of 14 million metric tons. So a metric ton of soybeans is about 37 million or 37 bushel. So you take 14 off from that, and it's a 500 million. I mean, it's not a small amount of soybean production that was cut out of there. And so it'll definitely be interesting to see what we have happen, over the next year when it comes to meal and oil supplies from a global perspective. Because here in the U.S., we've seen the price increase for meal and oil, but we can only crush so many soybeans. So there's only so much from an industrial capacity standpoint that we can get out of a bushel of beans. So it'll be definitely interesting, and that's been what we've watched. Brazil, though, has had pretty solid weather, what you would call reasonably conducive to large production numbers. They're actually looking at the potential of a record large soybean crop for the second year in a row. And that'll cut into some of those losses that Argentina saw. So we're talking about a 14 million metric ton loss a 14 million metric ton loss on Argentina, and Brazil may see an increase of 7 or 8 there. So it's one of those deals where it's just, we paid attention to it, and it'll take some time. When it comes to our foreign competitors, it takes a lot of time to figure out what it means from an overall standpoint, especially in Argentina, because a lot of farmers there had held back their beans on the farm as a hedge against currency fluctuations and things like that. So if you see the domestic price increase significantly down that way, you could find that there actually are more beans coming out of the woodwork than what we had anticipated in the first place. So definitely something that in this market, especially commodities, you've got to love commodities simply because you can have a market mover and be trading something, pretty substantial for a month or two and not even see the results of what it is that happened for several months to a year later.
A question from our chat here, and someone who's been wanting to get into commodities, but they said it seems hard to follow the fundamentals. You're obviously right in the weeds of it. So how do you follow the fundamentals of whatever market you're watching in general?
Yeah, the biggest thing is the supply and demand economics. So that it is a challenge, especially when it's a new market structure for someone. But the best thing that I pay attention to from an overall standpoint is the trend of the direction of ending stocks, both globally and domestically. So for us this year, for instance, just to kind of to get, if you're someone that was looking to get started, the trend, at least at this point in time, is to see corn stocks be reduced. The USDA has come out and lowered corn ending stocks, which is our leftovers. So you have your overall production, you have your imports and total supply, and then we have your overall usage, and whatever is left at the end of the year is what we carry into the new crop. And so it's our starting point when it comes to overall production. And so you just pay attention to the trend of that direction, which way they're moving. And so for corn, it's been lower both domestically and globally because the production estimates have come in a little bit lower than anticipated. China usage has been much higher than anticipated, and we've seen some solid disappearance that way. So corn has been shrinking. Beans, from a domestic standpoint, have been increasing, but global has been shrinking because of the Argentina concern and the increase in demand out of China. So it's really one of those things where, for us, we just pay closer. For me, anyway, I pay attention to where were we at last year? The best thing is to have the measuring stick of what baseline or what minimum pipeline supplies are, which in corn, a billion bushel is considered tight. A 1.5 billion is considered adequate, and 2 billion, like we have right now, is considered somewhat burdensome. Where soybeans, 100 million is considered tight, 250 million is adequate, and 500 million, like we have right now, is considered burdensome. So it's just stuff like that, kind of having an idea of what is considered to be a small amount of supply availability, and then knowing, the trend. Are we using more or are we using less? And then the beauty part about commodities is you could have something fundamentally, you could learn all you need to learn about fundamentals and still be shocked by the market's direction, like in soybeans right now, where we have the largest carryout in expected in almost 12 years. The reality is we'll probably see a significant increase in planted acreage this spring versus even what the USDA just had to just put out, meaning a further increase next year. And you still are up trading new contract highs on November. So that's the most fun part about commodities, I guess, in any market in general, is you can have the best well-laid plan and know all you need to know about the fundamentals of the market, and technicals and trade psychology will still trump everything else in the end. Because here we, like I say, here we sit in soybeans. There's no reason we should be putting new contract highs in, and yet here we are.
Do you know, this is another one from the chat here, do you know how much corn is still in storage this year?
Yeah, the USDA released that number here at the end of last week. It's as of March 1st, but it's 8.8 billion, I believe, give or take. So a pretty solid amount of corn still remains with the last half of the marketing year left to go. So it's a pretty substantial amount. It was actually a little bit higher than anticipated, which would indicate that we might be using a little less than what traders had thought we were using in the first half of the marketing year.
And last one here, and I'll let you run, but we had the prospective planning report last week. What is the next major catalyst here or next major report coming out for the commodities you follow?
We will be getting one supply and demand report next week. I believe on the 12th. Don't quote me on that. It'll be next week sometime. We'll get, like I said, a supply and demand update. And that'll just give us insight into what the USDA gathered from the information released last week with the quarterly stocks number. And that'll give us some insight, too, into what they're anticipating for when it comes to South American adjustments. Are they going to increase the Brazil crop as anticipated? Are they going to make further cuts to the Argentina crop? Things like that. So typically, supply and demand estimates don't necessarily have a significant market driving factor. But I believe this one will, just because it's an update after the quarterly stocks number. And like I said, we've been watching what's been going on in South America so much that it's going to give us a bit of insight into what the USDA anticipates on that one.
All right, we've been on the line with Angie Setzer. She is the Vice President of Grains for Citizens. You can find her on Twitter, one of the best handles, at Goddess of Grain. She is the Goddess of Grain. She's Angie Setzer. She's been on with us. Angie, thanks so much for your time. Have a good day.
Oh, thanks for having me. You too.
All right, we are at 8:48 now, just about 12 minutes left in the show. We've got Joel texting us pictures of him at the pool, and we're stuck. We're stuck.
Wait,
here.
did we tell Joel? Did we tell everybody where Joel is?
We
mentioned in the chat. I didn't know if we mentioned on the show.
Yeah, we mentioned. I mentioned he's in Texas. He's in San Antonio. He won't be back till Wednesday.
I mean, as soon as Michigan won, you knew he wasn't coming back.
Sure. Either he'll be the happiest he's ever been or the most depressed he's ever been on Wednesday. It's one way. It's one or the other.
Did you watch it?
Yeah.
It looked scary. I watched the whole thing. They just kept going for threes. And I'm like, man, their defense is so strong. Just start driving the net. Forget about the threes. Because at one time, Michigan was like 4 for 24 from the 3-point line. And that's the killer. That they could have been beating them easily if they would have just been taking twos the whole time. Because the Michigan defense is awesome.
Oh, it's great.
So they got to work that defense and not worry about getting the threes. They were behind, so they kept thinking they had to hit threes. but they could have just packed away. They had so much time, and then they started driving the net more, and that's when they started to take off. So I'm not a huge basketball fan, but I like the tourney, and the Michigan defense is phenomenal.
Yeah, I watch,
so they've got to win it on their defense.
I watch a lot of college basketball. I watch more of that than any other sport. They're probably going to get rocked tonight, so we'll see what happens.
Wow, it's a number 1 seed. I mean,
and the opening line.
What's the line? Do we know the line?
Yeah, 6.5 was the opening line for Nova. So we'll see.
They're gonna win. It's gonna be on their defense. Got to work that D.
Yeah, we'll see. All right, we got 10 minutes left in the show. If you have tickers you want us to look at, throw them out into the chat. We will take a look for you, Dennis. I think we got through most of the stocks on our list. Let me consider.
Yeah, we went through most of them. I'm just looking, what I had from Thursday night looking. The upgrades, and we talked about the gaps. Let's just talk, overall market here this morning, because we are getting a pullback here. We haven't given our thoughts on the overall market. I mean, wild day on Thursday. We had a huge rally for most of the day. And then we obviously sold off towards the end of the day because there was a lot of sell-in balances. We know that. We talked about those. And you can see in the last, 10, 15 minutes that the S&P really gave back a lot. Little follow through here this morning. I think we're still range bound to a certain extent, though. Like Joel would say, we still held that level of all levels, and that was down there.
He's been pounding the table on that guy.
258 to 259 in the SPY. That has been holding. The low on Friday, 259.83. Every time again, the 259 handle, we find buyers. I mean, there's the argument that you could try to go for it, and there's the low is in place, and I'm not going to argue with you here either. It's starting to look like it is forming a little bit of a low. It was a nice day on Friday. I think imbalances held us back, because we really sold off hard on a few stocks, but I'm more prone to buy this dip today. And I haven't been. And, Joel would be like, whoa, this is a big change of, because I've been kind of bearish. But I don't know now that we've held, and, I saw the action on Friday, and then the pullback towards the end of the day was mostly institutional selling from the quarter. I think there's an opportunity here. So I don't know, how far we pull back here today, but I'm interested in looking at some of these dips now and, getting my feet wet a little bit more. So I don't know from the investment standpoint, but as trades, I'm more inclined to buy the dip than sell the rip, at least for today. So I don't know how long, as a day trader, I'm always pretty short-term in nature, but I kind of feel like there's some stocks I want to buy. And, Apple is going to be one of them. I own Apple here right now. Apple's trading flat, but it's sold off hard at the end of the day. I think Apple could be up $1 here by 10 o'clock. So I'm sticking with it here, in any tape, because it's sold off, $2, $3 there in the last 5-10 minutes, just on that huge sell balance. And these moves often get retraced. So just sticking with my systematic approach to the markets, that has me long Apple. Obviously, I've got Intel paired against because Intel ran up, but I'm playing my systems, my normal systems. And, those gaps from Fridays do get faded. And I do expect, that maybe Apple could get a little bit of a rally here. It's still trading in the red, but I think Apple's going to go green today.
All right. I'm getting some instructions right now to call Joel.
Oh, so, yeah. Let's bring him in.
Let's
hear about this game.
Let's bring him in. I'm going to dial the number right now. Let's see.
He's at the pool? Is he going to FaceTime with us?
Tell
him to FaceTime. I want to see where he's at.
I'm just gonna call his cell phone and we'll see. I don't know where he is. If he's at the pool, I thought he would be just passed out from partying, for the last 3 days.
Joel.
Good morning.
Joel. Hey, you're on with us. Well, how's it going down there?
Oh man, fantastic! One more victory away. Beautiful day here in San Antonio. I got the pool all here to myself, so going to be a long day contemplating my strategy for the Wolverines against Villanova, but very excited.
How are you feeling? Are you feeling it? You think they're going to pull this out? I mean, it's their D that's going to win it for them. It's got to be on the D. What are your thoughts here? Give us your thoughts.
Thought is that Michigan's been disrespected this entire tournament, especially coming down here to San Antonio. It was all about Loyola. And, even the TV coverage, the press coverage, everything that was going on at the Alamo Dome, it was all about Loyola. And now they have the audacity to make us a 6.5 point underdog to Villanova.
The audacity, against the 1 seed.
Yeah. And coincidentally, in 1985, that was my senior year of college, we were a number 1 seed. And we were knocked off in the second round by an unknown Villanova team who was an 11 seed. So they went on to win the finals. They beat Georgetown and Pat Ewing that year. So it's time for Michigan to turn the tables on Villanova here. Great Michigan crowd here. But you're right, Dennis. Dennis, you not only make great calls in the market, but you were texting me they got to play some defense, and that's what brought them back in the second half.
Yeah. And they stopped going for threes. Were you just like screaming, Joel, like drive the net? Because
I was screaming defense. I mean,
the defense was huge.
Dana and I were awful quiet during the halftime, and we were just kind of looking at each other, down. I don't know if you saw at the end of the half, we had a chance to cut it to 3. We missed the front end of a 1-and-1, and then they went in and tipped one in at the buzzer.
Yeah.
And so they were up 7 at half, and boy, oh boy, after the game, I was screaming, it's great to be a Wolverine at the top of my lungs. But win, lose it.
Nobody murdered you?
No.
You were behind all those Loyola fans, though. Those kids were.
Oh, they're aggressive, I hear. Yeah, I don't know.
Yeah, but, I had a chance to chat with Chuck Barkley, Kenny the Jet Smith, also Spike Albrecht, a former Michigan player. We saw milling around the hotel. We got some pictures with him. We also got to greet the Michigan team as they went on the bus to play on Saturday. And believe it or not, when the team was coming down, getting to go to the team bus, the John Beilein, the head Michigan coach, got stuck in an elevator. Okay.
That's a bad omen.
And he was stuck in did you hear about that, Spencer?
No, I didn't.
I think that was Sister Jean's doing on that. I think she tried to put the hexamona. I'm even laughing at that one. I think she tried to put the hexamona on us, but haven't been checking the markets real close. What were the SPUs down, like 10 or 12 or something?
Yeah, I was going to ask you, do the markets even exist to you right now, or you're in Michigan?
He's off the grid.
He's off the grid, yeah.
I can't believe that the SPUs are trading without me doing my levels, but Dennis told me about the big sell-off on Friday. It looks like we're getting some follow through, so there's only one number to worry about. Dennis, no, you can tell him about that. Those, 4 or 5 lows from last week. As long as that holds, I'm bullish.
We mentioned it.
Yep.
Joel, I want to say one last thing before we go. What we have now is a Michigan sports trend. I don't know if you heard this, but the last 2 times that Michigan football has gone 8-5 and have lost in the Outback Bowl, the basketball team has reached the title game. That, what they call, is a trend. So,
and also Michigan, I mean, they kept their record going. They never lost in a semifinal in basketball. Now, final's a different story. And also, Dennis, you're going to be very anxious to hear this. Michigan's in the Frozen Four also. And that has only happened 6 times in the entire history since they've both been going. 4 of those times have happened with Michigan.
All
right. Been hanging out with Jason a lot and Josh. They're staying at our hotel. We've been having some fun doing some swimming, but it's all about game preparation today. And hope you guys have a good day. And go blue. I'll be back on Wednesday, win, lose, or tie.
Yeah. All right. Have fun out there. Don't get too crazy.
Okay. Go blue.
Yeah. 8:58 now, Dennis. Have the balances changed at all? They were small when we started. Looked
still small, a little to the sell side on a few, but we have rallied back in the market significantly here. Okay. We're only down a couple of points here now, so nice rally here. If you want me to give you a few highlights here from imbalanced land, I'm looking Pfizer 52,000 to sell. I'm looking Verizon 49,000 to sell. I'm looking Bank of America 90,000 to sell. I'm looking Square with a buy imbalance. SQ 72,000 to buy. That is significant. Stocks come back here this morning as well. Jumping over to your Caterpillar, 36,000 to sell, significant for $147 stock. Coca-Cola, 86,000 to buy. Like, I'm mainly going through. Every morning I usually go through most of your Dow components is usually what I'm looking at the most, because those are the ones that obviously get a lot of institutional action, which you see a lot. And, that's why a lot of times people ask me smaller cap stocks or smaller stocks. There's typically not a lot of imbalances because the institutional action isn't there as much. So that's why we often focus, on the major S&P components when I'm giving these. I'm looking at the Dow. I've got about 150 stocks on my screen that I'm really looking through, on a regular basis. And these are stocks I trade all the time. So that's usually the information I'm giving you, plus a few choice stocks like, the Squares and stuff that are really well followed.
Right.
So anyways, they look fairly small, mixed a bit, a little more to the sell side. S&Ps have come back quite a bit from the lows, though. So I think this is a day we could go green. I don't know why. I'm feeling a little bit green today.
Question from Terry Kern here. You mentioned using IB or having an IB account earlier. Is that mainly for your day trades?
No, Interactive Brokers I often use for a lot of my swing trades, but I just have it. I have an Interactive Brokers account. You know what the main reason is? It's just it's another application here. I never like to just have one trading application because what if my trading application goes down? What if, I have, hiccups with it? What if the quotes, I want to verify quotes. So it's another trading app to really have like a verification process for too, getting quotes from a different place, making sure, hey, these closing quotes are correct. And there's also another inventory of stock loan over there too. Their inventory is going to be different than Goldman's inventory. Through my own proprietary, software with Bright Trading, I'm using, Goldman's inventory, but their inventory is going to be different then. So I have a different inventory of locates as well. So that's the main reason why I have a second account, is more for, all those other reasons.
All right. That's going to be it for us today, folks. 9 o'clock. Hope you enjoyed this show. On our show tomorrow, we'll be joined by Nick Shaheen, as we are every Tuesday. If you want to catch our podcast, iTunes, SoundCloud, and Stitcher, or go to youtube.com/BenzingaTV to rewatch the show there. Hope you guys had a nice long weekend, relaxing, good holiday, whatever you celebrated, and you've had a good morning so far. Hope you have a good rest of your day as well, and hope you join us again on Tuesday. Have a good one.